and get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Hang Seng is up around 0.5%. The Taiwanese index absolutely flat.
Supports come in at 23,847.
The past few weeks, when there was liquidity crunch, they didn't do such a huge purchase of bond.
24,330 is the open, and 60 points in the green.
There is no positive surprise from the major earnings which have been declared so far.
A steady reduction of interest rates, I think, is needed at this point in time.
Today, markets are consolidating, at least in the morning. Mid-cap action is intact. The mid-cap index is up 0.5%.
India is definitely mulling more economic measures to bring pain to the Pakistani economy.
After the more than 1% rally that we had yesterday, today markets are consolidating.
Good afternoon, hello and welcome to Closing Bell. We are here in the last hour and it's been a quiet session after charging ahead for the last several days. The market has chosen to take a bit of a pause, take a bit of a breather. And we have been around this zone. I mean, the morning opened with a big flourish, but then we corrected almost around 10 o'clock. And since then, the market has only consolidated. The good thing is that there are a lot of large cap names that are seeing consistent buyings. And that's preventing a wider fall, whether it's a Reliance, whether it's an Infosys, whether it's TCS. So they're keeping the green flag flying high. But let's see. Promises to be an interesting last 1 hour. I'm Surabhi Upadhyay. With me, as always, Reema Tendulkar and Nigel D'Souza. We'll have Prashant in a second as well. Hi, folks. Good afternoon to everybody.
Good afternoon. And once again, as you said, it's Reliance Industries, which is powering the index up. Reliance Industries share price has moved up 8% in the last 2 days, and the stock is now at a 4-month high. And IT has made a comeback. Yesterday, the Nifty IT index didn't participate when the benchmark indices gained 1%. It closed in the red. But today, IT is up 1.5%. You've got HCL Tech Mahindra, TCS shining in trade. Look at the mid-cap action. Hexaware is up nearly 4%. I think the last time I checked, the company is talking about good growth in Q2 and great growth in Q3. So that's got the street excited. IndiaMart is surging ahead of its numbers later today. And you've got other mid-cap IT names. So whether it's Zensar, LTI Mindtree, Coforge, Birlasoft, across the board, pretty strong price action on the way up. Other gainers include BEL along with the rest of the defense pack. Innocent Bank has been the big mover this month. And on the way down, TVS Motors, where the numbers were fine, but the commentary was a bit subdued. They're saying base effect will catch up in terms of the growth. So Q1 growth, could be impacted on account of the base effect. And plus, not to forget, as Jeffrey said, valuations are at 40 times. So that is a tad bit rich. So TVS Motors down 3.5. Nigel.
Well, that's right. I think Reliance Industries is leading the way. But what's taken a bit of a backseat is Nifty Bank. And in the last 6-7 trading sessions or so, the Nifty Bank has gone to that 56,000 odd mark numerous times. They've gone out there thrice, including today, very, very close to that mark. And that level is getting rejected. So, I think the next leg of rally will happen when the Nifty Bank can decisively conquer the 56,000 mark. Because Reliance Industries now is, finding its feet. That's leading the rally. The Nifty Bank needs to give some support. And IT stocks have already pulled back a goodish bit. So I think that 56,000 mark remains elusive. The bulls will want the Nifty Bank to go ahead and conquer that mark, guys.
Absolutely. And I just want to draw our viewers' attention to one more trade, and that's defense. I mean, it's huge. It's strong. So if you think it's a quiet session and no one's doing anything in the market, far from it. Because the mid-cap index is very even, Stephen. The advance decline ratio is also 1:1. But peel beneath the surface, go beneath the surface, and then you'll see what's happening. The defense trade that I'm talking about, look at the shipbuilders. Look at Mazagon, Garden Reach Shipbuilders. Look at what's happening to some of the other names, Paras Defense, some of the private sector names on the defense side as well. It's a massive, massive move that we're seeing on the stocks. Cochin Shipyard as well, almost 10% higher. So big moves in some of the defense names for sure. Like I said, even Paras. And okay, so that's one big trade that's definitely playing out. But even otherwise, I mean, there's selective stock selection that's going on for sure. Honasa could be a case in point. Honasa is up almost 5%. at this juncture. Whirlpool is having a good session, 7% higher. Sona, BLW, some of the auto ancillaries have been smart from the morning. Sona would be an example of that. So at an individual stock level, beneath the surface, going beyond the index, there's a fair bit going on. And with that, I think, we've got Prashant also mic'd up. Prashant, not a bad afternoon. We were just discussing.
Not a bad afternoon, but it's a quieter one, right? And, I always welcome quieter sessions when you don't have to respond to 200-point ups or 200-point downs because it's too dramatic, right? And so a few calmer sessions, at least at an index level, and then we can, I guess, take it forward. In terms of what the market wants to do. But you need those, and we've not had those ever since the 2nd of April. It's either been, a market's selling off, gapping down, or it's basically been gapping up over the last 2.5 odd weeks or so. Let's actually quickly ask Mitesh Thakkar what he'd want you to do in terms of just trades and the setup overall. Mitesh, good afternoon. What does one do now?
Prashant, my idea is that, at higher levels, I've been recommending to take profits, reduce your long exposure purely because of the fact that while you've had a good rally, the decline which happened on Friday, I think kind of broke the momentum on the hourly and the 2-hourly chart. So I think there is some consolidation which is needed. The daily averages are also slightly left behind, and we're also overbought on the hourly chart. So good chance and higher probability that we'll see a consolidation between 24,450, 500, give and take a few points, about 24,000, and in the worst case scenario, 23,850, 870. So I think that's the kind of market we are into. So right now, I think the idea is that, avoid taking long on the index, wait for declines. It's a market which is when the setup says buy on declines. So I think wait for the decline to happen. If it happens, then I think look at it, it's pretty long position at lower levels. On the stock side, I have a buy on Tata Consumer with a stop at about 1154 for targets of around 1200. And a sell on Tata Technologies with a stop at about 680 for a target of around 630.
Mitesh, just a quick follow-up from my side on these defense stocks that are breaking out big time. I was just checking, Mazgaon Dock is back to its all-time high levels. BEL, Cochin Shipyard is still quite a distance from the peak. There are smaller names like Paras Defense, Astra Micro. The entire pack is moving up today with momentum. Do you see anything interesting? I mean, I'm not saying an intraday trade, but even from a positional standpoint, do any of these charts look interesting?
I haven't been tracking all of them. In fact, the one defense stock which is part of my portfolio is Mazgaon, it's HAL. But that about Mazgaon Dock has been on my radar. And I think, the stock is now getting past its earlier highs of 28.50, which was the highest ever weekly closing, and around 29.20, which was the highest ever intraday level, which was in the July of 24. Now, all those levels have been cleared. So, there's no pivot at the upper end left to be conquered. It's a blue sky territory. And if you look at the overall consolidation and the targets, you try to work it out, a rough target which comes to my mind is around 3,600 over 3,700. So I think it's got a long way to go. It's a good buy to take at current levels. I mean, it's slowly accumulated because this week the stock is only up 12%. So you buy partly now, get a 70, 80 point kind of pullback, keep adding over there, and keep a stop below levels of around 25.80. And I think this is stock which is heading towards 3,700.
Okay, let's talk about the resurgence in Reliance Industries. Over the last 2 days, the stock has gained close to about 8%. It's now at a 4-month high. It's added 1.5 lakh crore into its market capitalization. The market cap now stands at 19 lakh crore. And even after the up move, the stock is still 12% below its 52-week high. So just trying to understand some factors which could be driving it. One, it's gone through a tepid period, a prolonged period of underperformance or consolidation. Now, in the last 3 years, the stock has given you a return of only 1%, which basically means 3 years, no return in terms of the stock price, and it's underperformed many of the key benchmarks and sector peers. So that's reason number one. Secondly, in terms of valuations, currently it's trading at 11 times EV/EBITDA. You don't have a direct peer because for Reliance Industries, you do an SOTP valuation given its varied businesses. But say for a retail, which is now seeing a recovery, it's still being valued at a discount to trend or even another peer, like an Avenue Supermart. On the Jio business, where its closest peer is a Bharti Airtel, Reliance Industries has underperformed Bharti's share price by nearly 40%. So some people believe that maybe there is value in the stock price after the long, prolonged period of consolidation or underperformance. And thirdly, the FI ownership in the stock price was consistently coming down. There you have it. Over the last 4 years, the FI holding in Reliance Industries was in excess of 25%. It dropped below 20%. And especially towards the end, as the FIs were selling, they sold perhaps their stake in Reliance Industries. But now FIs are making a comeback. So along with banks, is Reliance Industries a stock that they would be favoring? And plus, as analysts point out, there are multiple triggers ahead for Reliance Industries. One, they're excited about the acceleration seen in retail. Two, on Jio, there are the potential for future tariff hikes and an IPO. The new energy business, because remember in the quarter, the company announced that they've commissioned the first solar module plant. I mean, we don't know the way it's going to play out, but there is hope that maybe this will emerge as a growth driver. So the street is watching this very closely. And even free cash flow. After many, many years, Reliance Industries last year turned free cash flow positive. So that also is seen as a big positive. So put all of this together, and that perhaps explains the resurgence seen in Reliance Industries. The Deepak Shenoy, founder of Capital Mind, is now with us. Deepak, is Reliance a stock that you fancy?
In our portfolios, Rima, we've, I think, owned it for a while. I know that it's probably fallen quite a bit from where it used to be, but, you know, the main trigger for us is the potential demerger between the different units. There's the oil to consumer, there is the Geo telecom unit, there's a retail unit, and of course the rest of the businesses, which includes a bunch of energy, medical, and some other plays, including media. I think the sum of the parts is greater than the whole, but unless you see the parts, you're not going to get the valuation of the parts individually. So the trigger here lies in, I think, a demerger of some sort, which could involve an IPO or involve just shareholders of Reliance getting the individual businesses' shares. We hope this will happen in the next few years. It's been about 4 or 5 years since this has been on the cards, but it's not yet happened. However, the results themselves are okay. It's not like super exciting to me. It's been a rough year, I think, overall for retail and for telecom. And hopefully we'll see some kind of improvements from an operational perspective in future years. But like I said, the bigger trigger here is a demerger, not them showing great consolidated results per se.
Okay, all right. Well, we have got Ambuja Cement's numbers that are flashing for you on the screen. In unexpected lines on a sequential basis, there is a big improvement actually what we are seeing. So margins have improved. If you look at the consolidated numbers as well, from sub 10% margins, well, it's coming at around 18.5% or thereabouts. So the consolidated margins are good. Remember, these consolidated margins include part of what ACC has done as well as what Sanghi Industries has done. I'm looking at the standalone numbers actually. Even out there is some kind of an improvement that we're seeing on the margin performance. So that was on expected lines, and that's the way it's played out as well. So Ambuja Cements, there are plenty of one-offs because there's a government grant in there. There is a larger other income as well. But it appears, first look at it, it appears that the expectation was that we're looking at a good performance coming in on a sequential basis, and that's precisely what it is. Deepak, any view on Ambuja Cements? One of the stocks that saw a sharp correction from the top. The company raised money, a promoter sold some stake as well, and the stock just went one way down. At these levels, would you be interested?
No, we're not interested in cement as a whole right now. I think it's very boring. What will you do with cement? It's just a commodity, and you're not even getting this company so cheap. It's a 30+ times earnings, not meaningful in terms of growth. So this quarter, I think the current number shows something, but overall, cement doesn't grow at a meaningfully large pace in India in general. So everybody tries to cartelize and try to keep their margins stable, even though it is a commodity. So I find that, not a great long-term business to be in. So cement in general is not something that we like in the PMS.
All right, Deepak doesn't like it, but it appears, the sector itself could be in for better times because government spends have been picking up and also input costs have been going down. And after many, many quarters, we're seeing that price increases, they're sticking a little bit at least. So Ambuja Cements on a sequential basis has improved in terms of an operational performance, but we're waiting by once we get the volume number, maybe we could get a better sense. For the time being, the only point that we'll make is sequentially, there is some improvement with margins recovering from sub 10% to around that 18% odd. Guys, back to you all. I'll just have a closer look at the numbers.
Yeah, absolutely, Nigel. But I was just saying, Deepak, I think Nigel would not agree at all. You're saying cement is boring. Nigel is the most excited when we have a small improvement in the EBITDA per ton. And it's been a very interesting, this year, last 12 months, actually has been very interesting. The maximum deal action in this space.
You know, Surabhi, just to be fair, on editors roundtable around, I think, 45 days or so ago, when everyone was focusing on Trump's tariffs, we had put out this piece that if you want to be saved from all these tariffs, you look inward. And what came on the radar was cement. The stocks had seen a sharp correction. Valuations are pretty okay at that point of time. And from there, they've done okay. So volumes are picking up, pricing is improving, and input costs are still down. So operationally, things will improve.
No, absolutely, absolutely. See, that's passion speaking, Deepak. On a lighter note, we'll let Nigel get back to the numbers. But okay, let's talk about other stuff in the market that's really capturing the eye. And Deepak, that has to be defense all over again. I mean, when the market was down 4-5 months of correction and then all these defense stocks were selling off big time, they came off 30-40% from the peak. But look at the recovery. Mazga is making new highs. I think HAL is maybe 25-30%, less than 30% away from those levels. And anything and everything, BEL itself, everything is rising. Now, how do you look at it? I don't know, man. Is this just a sentiment move because of what's happening in the country right now? Or is this some real long-term money getting back in? And what would your advice be?
So I think we've been have been very big on defense in general. We've probably reallocated some of the stocks very recently and possibly regret taking away some of the positions that we had. Primarily because I think there's the landscape of this is a 10-year thing. It's not just the current skirmishes or the challenges that we face. They are real, of course, but I think defense as a sector is going to improve dramatically. Simply because the government is going to spend a lot more on domestic defense. Regardless of the contours of a US deal, India is very clear that it needs defense independence from having to buy equipment from foreign players. India is the number 1 or number 2 importer of arms in the world. We spend almost as much or more than Saudi Arabia as well, which is also very high. And to be fair, we should be, giving most of that stuff to domestic manufacturers. So the domestic manufacturers, the spectrum, I think we identified this in 2022 mid, and we started buying a lot of players at that time. And I think the scale of this is still 4x or 5x more in the next decade compared to what it is now. So yeah, I mean, you might find some of them are expensive, but if they have the capacity to grow and the hunger to grow, I think the defense players can get a substantially higher market share. Interestingly, some of them are even the defense companies owned by the government because they seem to get some of the larger orders as well. But I eventually think this will, translate into many other areas which are quasi-defense as well, including nuclear power, including some of the other defense-related industries like, BHEL also manufactures a bunch of stuff. M&M manufactures a bunch of stuff for defense as well. So this is also, this will create sub-industries in other areas. So yeah, very positive. Today's reaction may be a little, based on news, but I'm looking at the next 10 years. I think, very exciting times. We'll have a lot more.
Okay, so in that case, Deepak, sorry, coming in over there for a little more nuance. In that case, what part of it? I mean, would it still be HAL? Would you look at these shipbuilders despite the kind of run-up? Would you look at some of the private sector names like Astra and Paras? A lot of smaller names which also have sizable perhaps growth opportunity. So what specifically?
Yeah, I think shipbuilding is actually quite good. If you see ThyssenKrupp in Germany, the stock price has actually doubled because in the last 2-3 months, because Germany is going to have to kind of build its own defense infrastructure. America has decided to stop funding the NATO part of that alliance. So there is going to be a lot more expenditure in Germany, and they're going to give it to German companies. Some of these German companies get a lot of equipment sub-manufactured by Indian shipyards. So you get a little bit of a transfer of that from a business perspective. There is also, of course, like you said, the private players. But the private players here are relatively small. And it isn't, in many of these cases, there may be some succession issues in terms of once the top brass has crossed 75 or 80, you're going to have issues in terms of who comes in next. That is a problem in some of these companies. But I generally feel that the space looks quite good. The only thing that I don't like in this area is something of the order of EPC, the equivalent of EPC, where you don't get repeated contracts. You only get one project-wise contracts, where I think it's not so interesting. If you have some IP in the final version of what's being built, I think that has more potential. But then again, every place has different opportunities. So I won't say any of these things are bad in general. So it's whether it is shipbuilding, whether it is arms, whether it is building parts for the howitzer or things like that. Each of these has different growth paths, and I think all of them will grow. The growth will come at different points. So, but then I'm looking 10 years. So, I don't care if the growth comes after 2 or after 4, as long as the space continues to be exciting. I mean, this is going to be, sadly, it is going to be a place where the stocks will perform primarily because we are scared or we are, trying to shore up our defenses.
Okay, let's talk about realty. They're in focus. So first up, it's Prestige Estates, because the share price is up nearly 3%. The company received the much-awaited RERA approval for a key project in Indirapuram. And the second one is Oberoi Realty, where the stock is down nearly 3% after a weak set of numbers. Riaz here to give us details on this.
Well, real estate stocks have been in focus today. On the positive side, we've got Prestige Estate in focus on the back of a RERA approval for a key project in Indirapuram. The project has a sales potential of more than rupees 10,000 crores, and it is the largest project in NCR outside of the Gurgaon region. CLSA has come out with a note on Prestige Estates on the back of this, saying that this launch will lay the foundation for the strong pre-sales in FY26, and it will also allay concerns over the miss in the FY25 pre-sales guidance. This approval was earlier expected in Q3 of FY25, and it was also the key reason for the miss in the FY25 pre-sales guidance. Remember, the company had only achieved about rupees 17,000 crores versus its guidance of 25,000 crores. CLSA has also said that they believe that the company can sell around 60 to 70% of this project in FY26 itself, and the company is likely to launch the project in the coming days. CLSA has maintained its outperform rating on the stock with a target price of rupees 2,380. On the flip side, we've got Oberoi Realty reacting to weak numbers for Q4 of FY25. The bookings in this quarter have gone down by around 52% on a year-on-year basis. And if you look at the number of units booked, those have come in at just 78 units versus 228 units booked that we saw in Q4 of FY25. Collections are also down around 29% over the previous year, although rental revenue has gone up by around 74% over the previous year. Q4 was largely driven by sustenance sales for Oberoi Realty, and MK has also come out with a note on the stock saying that the weak performance in this quarter was due to a sluggish sales velocity at almost all of its projects. Except for the Worli project, operational performance in the residential business has been weak, and they've also highlighted that in Thane, out of the total 65% inventory is yet to be sold for Oberoi Realty. So reacting to this, the stock has been trading with cuts of almost 4%.
Deepak, we've not had too many real estate numbers coming through, but we've got one, Oberoi Realty. Your thoughts on what real estate is likely to do now? There is an inward focus. Domestic companies are being preferred over export-oriented. Is real estate one of them? And do you have a preference in terms of geography companies?
It's quite interesting because I think, you've had realty go crazy in terms of numbers in the last one or 2 years. I think there's some kind of moderation in some areas. We're seeing some moderation, probably Mumbai. I was surprised that Prestige was not already able to sell all its projects in Ghaziabad in a market where everything is pre-sold like years in advance. But maybe there is a supply thing. A lot of supply will come and get available in terms of secondaries in the middle of 2025 and 2026, because a lot of these projects were launched just about immediately after COVID. They're going to come to a point where those houses are available, and the investment part of those houses will then be maybe available for sale and that might bring down some of the demand towards the end of next year. But right now, I still think there's a lot of demand for real estate. Housing loan rates will come down soon as banks would or have linked it to repo anyhow. So you should see some kind of an uptick in household personal loans. Household still, we posted a note today, 52% of all bank loans to individuals are still towards housing. So I think housing remains a very attractive thing for people to desire and want. So I think at some point that remains a macro kind of a positive. But in general, we've seen this. While you might see housing sales grow, in general, and housing prices don't come down, the real estate companies generally don't seem to announce that much in terms of profitability. They have cash flow issues, like they take all the profits they generate and buy land somewhere that kind of does nothing for 10 years. So they're not very good capital allocators in that sense. So we don't have a major amount of investment in real estate, very small pocket here. But we find that, they should be better capital allocators. And then they can earn much better ROEs as well longer term.
Okay. All right. Deepak, we'll leave it on that note for this afternoon. Thanks very much. Always good talking to you. Have a good rest of the day. Well, we have to take a quick break. But before we take one, here's some good news coming in. This is Network 18, which has beaten Times Internet to become the #1 news publisher on ComScore. News 18 races past the Times of India to be the #1 news brand in the country. That's not all. Network 18 is the #1 digital network in the news and information category. As per ComScore report of March 2025, News18.com has 38% more users on native and social platforms than of the Times of India. As per ComScore report of March 25, Network 18 is way ahead of the Times Internet with over 55% more internet users and on native and on social platforms.
Okay, welcome back. You've got the market, which is doing just fine, 20 points higher, 24,350 is where we are at. Dinshaw Irani is with us of Helios Mutual Fund. Dinshaw, good to have you with us here. Thanks very much for your time. If you look at WhatsApp groups, the stock market kinds or otherwise, there is only one topic which is being discussed, which is the India-Pakistan situation. And it's just some of them really, going into what can happen, simulations, this, that. The market here is just happily chugging along. We're up 20 points. What's your sense? There are some reports which came through which indicated that there are some operations being conducted, but within our borders, security operations, etc. Is the market taking this a little lightly, or does it have one wary eye on these developments? What's your sense?
So basically, Prashant, by the way, good afternoon to you and your viewers, and thank you for having me on your show. The fact is that everybody is right now betting on sanity prevailing on both sides, right? There's always, what is the reaction to this? Whatever actions we take, there has to be some reaction, but how limited are they will be the way to look out. In fact, the perfect one would be if the way it happened in Balakot, I assume, because Pakistan denied that anything had happened, right? So I think that's what the market is looking at, and I won't spend too much time on this also anyways. But the fact is that a couple of overhangs are over. Obviously the India and Pakistan tension is the one which is a big overhang today. But the other overhangs like the tariff wars, I think some sanity is prevailing in the US. They've taken a 90-day pause. Probably till 9th of July, I think things are still on pause. So let's see what happens after that. So that was a breather for the market. One good thing was that I think the US President, Mr. Donald Trump, he really bowed down to the markets. And that's what is helping us believe that he'll come back with some sensible solution whenever this 90-day pause goes away. So that was one big overhang which was over. I think now from here on, one has to look at what's happening in India, what's happening with our markets, what's the fundamentals looking like. And frankly, they are feeling, the feeling is that the March quarter will again be nothing to write home about. The Nifty components which are reported thus far, they've seen a low single-digit kind of growth on a consolidated basis. There've been fair bit of disappointments. If I was just reading up a report that of the total numbers which have been reported thus far, some 60-70% have been disappointments as such. So that's not helping, right? I mean, the big rally which came about, I think, came on the back of one, relief, and secondly, the way the FIs came back in big numbers. I think that's what's helped, and from here on, one is to look at pure numbers.
But it said, I think the pace of earnings downgrades is, so far at least, is less than what we had in the prior quarter. So although we have seen, a lot of, downgrades, but it just seems that the, pace has come down a tad bit. By the way, you should keep your eye on Trent, because Trent numbers are expected and the stock is moving up a little positively. Remember, Trent is a stock which has fallen 37% from its 52-week high. We already have a cheat sheet. The company's indicated in the pre-quarter update that the top line growth will be 28%, which analysts point out will be the lowest in 16 quarters, and FY25 revenue growth should be 39%. Pull up that intraday chart of Trent, a little bit of a spike. So Dinshaw, hi, afternoon. So what have you been doing in the last 1 month through this volatility?
Just let me get back to you on that downgrade numbers being less than what they were last quarter round. The fact is the first of the block reportage is normally strong corporates, right? So that's why you're not seeing those. And the fact is that these strong corporates also have seen downgrades happening, which is fairly a worrisome factor. Having said that, I mean, what we've been doing, however, because we were very worried about this tariff war going out of hand, and as a result, what we did was we did conserve a bit. We said let's look at only the domestic facing stocks, those which are not impacted by these kind of uncertainties in the global market, and that's what we try to do. And once again, if I remember right, on your last show, I told you that these are places to hide at that point in time, because if this uncertainty goes on for a while, it's a matter of a few quarters before they also get impacted. But fortunately for now, I think that's worked out fine for us. We've I think 80-85% of our stocks are, the sectors that we are in are BFSI, hospitality, hospitals, consumers. These are the few that we're in today.
Got that. There is a EV IPO which is on as we speak, which is Ether. But the other one, which has been listed for a while, which is Ola, is something that we reported on. And now this is source-based information. Sources tell CNBC-TV18 that SEBI is looking into the veracity of disclosures made by Ola Electric. Yash is here to tell us what this is about. Yash, take it away.
Well, that's correct, Prashant. So market regulator SEBI, looking into, as you said, the veracity of the disclosures made by Ola Electric on the exchanges. Now, SEBI action is linked to complaints regarding disclosures that Ola Electric has made. And to be specific, one particular disclosure which caught the market regulator's eye after certain investor complaints which were received by SEBI, that was the February 28th disclosure, where Ola had announced sale of 25,000 units for the month of February 2025, but government's portal, that is Vahan data, showed only 8,600 registrations. Market regulator SEBI, of course, has taken in account the move that came in the stock also after Ola, announced the number of 25,000 units for February 2025. SEBI is also looking at the clarification which Ola had provided when it comes to this particular main disclosure, which comes to the sale of electric two-wheeler units for February 2025. Ola had, of course, said that it is a straightforward case of temporary registration block and they are working towards streamlining it. That day itself, the stock was up 6%. Now, market regulator SEBI is looking into whether the investors are shortchanged because of this alleged wrongful disclosure made by Ola Electric on the exchanges. Apart from that, since SEBI is looking into the matter, it is also looking at many previous disclosures made by the company and looking at how authentic they turned out to be moving ahead. We've written to Ola Electric on this particular query, but we're yet to receive a reply from the company on this.
Okay, all right, got that. Yash, thanks very much for the update there. So for Ola, the going has been rough and tough for a while right now. Dinshaw, good to have you on the show this afternoon. Great conversation as always. Let's talk about this, the automotive space. Not that there are too many big numbers that are firing up. I mean, growth has been missing. Barring Mahindra and Mahindra, most others have been struggling. But in auto, would you like anything and any interest in some of these pure play EV stories that are now coming to the market?
So yeah, I mean, I don't know how many of you have seen this, but we are anchors in one of the anchors in Ather. And the fact was that with a value share of more than 20% and a market cap, asking market cap of $1 billion or dollars, that didn't make sense to us, actually. I think that was a fairly appealing, though we don't see much of profits going forward in Ather also. I mean, the way the Ola is doing also. So the fact is, it's a much more, I think, premium bike as compared to what Ola offers. That's the kind of call we took. And that's why we felt that this was a good EV play to enter as such, and probably the only EV play that we have today. We also have a two-wheeler play, which is disclosed in our portfolio, which is Bajaj. Basically, the fact is entry-level vehicles is two-wheelers is what we're looking at, given the kind of SOPs the previous budget gave on the income tax front. So these are a few auto plays that we have. Otherwise, we don't have much exposure. As you know, that we are quite negative on a disruption in the auto space brought on by EVs as such. And that's why we're staying away.
So, Dinshaw, you're saying that you don't see even Ather, and thanks for telling us that it offers good perspective on, why you would take that anchor position. You're saying that you like the business, but you're not looking at too much of a rise in profitability immediately. Did I get you right?
So basically what I'm saying, Subhi, is that for overall market, I mean, if you're giving it, as I said, the value market share for Ather is 20% plus odd, right? We can keep disputing. Let's even assume 20%. The fact is that we cannot assume that the overall India market is going to be just $5 billion. I mean, the market cap of all EV plays in India is going to be $5 billion. And that's why we said that, look, it's a matter of time before the market cap in India of EV players moves beyond, say, $10-20 billion or more, in fact. And that's why we said, that, okay, looks like it's come at a very decent price. And as I said, EV itself, I mean, the break even itself will take a while for Ather to play out in. But I think the valuations are fairly appealing given the growth rates that we're expecting from the industry.
All right. Hi, Dinshaw. Good afternoon. Good to see you in. What about the quick commerce space? It's making our lives easier, but the competition is getting a little bit more intense in there. You all are quite positive. What's the view?
So basically what we did, Nigel, was we used to own both the quick commerce listed players, right? We got out of one because we didn't like their strategy of fighting discounts with discounts. We remained with a bigger player, if you will, which is eternal. I mean, the Zomato as well, Zomato as such. And we remain with that. Again, I mean, even if there is competition building in, the fact is you need to get the logistics right. You need to get the algos right in this business. It's not just about setting up dark stores. If that was the case, there would be a lot of all the big corporations in our country would have come and swamped the place with these kind of logistics businesses as such. It doesn't work that way. I think it's a winner-take-all kind of a market. I mean, we've seen that in the case of, say, Meituan in China, or for that matter, DoorDash in US. So I think that's where we're coming from. And I believe that there's enough potential left in this industry to see healthy growth, even with some competition coming in.
All right, just one word. The state cabinet, Maharashtra state cabinet has approved the EV policy. And the word that we have is passenger EVs will be given bigger subsidies. And that's why a couple of stocks are in focus, as our ticker team was telling us. Tata Motors as well as Mahindra & Mahindra, because they have exposure to passenger vehicle EVs. So just wanted to highlight that for our viewers as well. At the bottom of your screen, we'll try to get you further details. But for the time being, Tata Motors seems to be one, and Mahindra & Mahindra. Guys, back to the studio.
No, absolutely. And, we'll keep an eye out on this one as we kind of parse through some of the details about what has really been approved. Dinshaw, we'll thank you here. Appreciate your time here on CNBC-TV18 and look forward to the next conversation. So some more details. The new EV policy, passenger EV will be given bigger subsidies and so on and so forth. By the way, our colleague Shireen caught up with the Maharashtra Chief Minister Devendra Fadnavis yesterday, and he did sort of allude to the Maharashtra EV policy, and we probably should be able to play out some sound bites on this in a bit from now. But this is essentially what is coming through. Some categories of EVs will be waived from toll payments. So this is looking like, I mean, there is a bit of a boost which is coming through. EV manufacturing and consumption and charging infra will be boosted. So some of the stuff which is actually coming through at this point. We'll take a break. We're back. Some short-term trading ideas with the technical experts and more in terms of fundamentals and stocks on the other side.
Welcome back. You're tuned into Closing Bell. You're on CNBC-TV18. Well, the markets are holding more or less flattish as we speak. And I think we could hop across actually to Prashant. I think he's got an interesting piece that he's going to be putting forth on gold prices and how they've evolved. Prashant, take it away.
Let's take you into a global financial story that's unfolding quietly but powerfully. A new gold rush 2.0, led not by consumers or investors, but by central banks. Why are the world's top and most powerful monetary authorities holding gold at record levels? Let's break it down. Let's look at the pace of the rise in gold prices to begin with. Now, the rise in gold prices is not new, but the tempo has shifted. After the US abandoned the gold standard in 1971, it took nearly 38 years for gold prices to hit a $1,000 mark, a milestone finally reached in March of 2008 during the global financial crisis. The next leap was quicker. Gold doubled to $2,000 in 2020, August 2020, fueled by the economic uncertainty of the COVID-19 pandemic. That took 12 years. But the pace has since accelerated dramatically. On March 14, 2025, this year, spot gold prices broke through the $3,000 barrier for the first time. The climb now for the last $500, $25 to $3,000, took just 210 days, a stark contrast to the previous $500 increments, which historically averaged more than 1,700 days. Now, gold's rise is no longer gradual, it's gathering speed. Now, the analysts at JP Morgan have divided the gold era, modern gold era, into three regimes, three periods. Let me put this out. First, as a pure inflation hedge from 1970s to 1990, then as a mirror against real US bond yields, 2000 to 2021, and now a geopolitical safe haven driven by central banks pivoting away from the US dollar. And of course, I mean, you could add a fourth one. There is Trump driving an American breakup from the rest of the world. Let's take it one by one. The first era, in the 1970s and 80s, gold was all about inflation. When inflation expectations surged, and they surged to 8% in the early 1980s, gold prices exploded eightfold. But once Paul Volcker, the then Fed chair, crushed inflation with aggressive rate increases, gold prices collapsed. Now, from 2000 to 2021, this is the second era, the second regime, survey-based 10-year inflation expectations remain largely anchored between 2 to 2.5%, while real gold prices increased significantly. Now, this was a new dynamic, a newer relationship. Now, the relationship between gold and US treasuries is rooted in the competition between two so-called risk-free assets. Gold, which offers no yield, becomes less attractive when real yields on longer-dated US treasuries rise because the opportunity cost of holding gold increases. Conversely, when real treasury yields fall, gold becomes more appealing, more valuable as a store of value. In the 2 decades starting 2000, gold consistently showed a strong opposite inverse relationship with a 10-year US real treasury yield. And this is the third stage then, the rupture. In 2022, US and its allies froze $300 billion of Russia's foreign reserves. This shocked the world. Suddenly, holding dollars or euros or other currencies, paper currency, wasn't just about economics. It carried geopolitical risk. Since then, central banks have turned into super buyers of gold, price insensitive. Price matters little, securities matters a whole lot more. Adding to this, the US under Trump 2.0 has moved towards isolation, America first foreign policy, pulling back from alliances like NATO, the United Nations, the World Trade Organization, and of course, as I described earlier, weaponizing sanctions as well. This has reinforced the instinct amongst many nations to diversify their reserves, and gold is the fallback. The result, a historic buying spree surge. Central banks used to buy around $400 tons of gold per year. In 2022, they bought more than 1,080 tons, the highest on record then, and they kept going. 1,051 tons in 2023, another 1,045 tons in 2024, and this year, 2025, has started no differently. Today, central banks collectively own around 36,000 tons of gold, nearly 18% of the total reserves. That's a sharp jump higher from 15% just a year ago. I mean, 3%, right? But it's happening at the highest levels of global finance. It's meaningful, it's chunky. Meanwhile, you can ask the question, is supply of gold keeping pace? The answer is no. Mining output has been flat since 2018, constrained by falling ore grades, rising extraction costs, and stricter environmental regulations as well. In short, you got demand, which is strong, central banks are big buyers, supply is constrained as well. I mean, just a factoid, right? I mean, interesting factoid, just to remind us that gold is rare and that scarcity drives value as well. If you look at all the gold which has been mined through human history, it's about 2 lakh tons. It's enough to cover a soccer field, but only to a depth of 1 meter. And most of that gold is with us right now. To conclude, what we are witnessing is a true gold rush 2.0, not fueled by just inflation, fiscal deficits, paper currency debasement, etc., but by geopolitics, trust and fear. In a world where financial assets can be frozen overnight, gold once again is the ultimate fallback.
Okay, very, very interesting analysis. The gold rush is on, and by some estimates, this is only the beginning of it. When these moves start, they last for a long, long time. And by some technical estimates, this is probably just the first phase of the gold rush. All right, after that really interesting take from Prashant, let's quickly move on back to the markets, equities, that is. It's been a quiet afternoon. Let's take stock of where things are. Absolutely flat. Nifty's just about 12 points down. Mid-cap index, 0.25% up. Mitesh, final advice now. Any trades, index, stocks, what would you do?
I think the index is slightly coming off. So maybe, we'll take one STVT call. That's Apollo Hospital. Keep a stop just about levels of 70.20 and 69.30, 69.40 kind of a target to look at. And the other hand, TI India is buy on VTSC kind of a trade. Keep a stop at 27.79 and a target of 28.30, 40 for tomorrow.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's welcome Jay Bala of Cash the Chaos on the show. Hi, Jay. Good afternoon. How are you feeling about the markets? We're talking about geopolitical risk on the borders. We have Trump's tariffs as well. The bulls are having none of it. And who's come out to bat? The big boy, Reliance Industries. That's the one that's doing heavy lifting. We're good for more? Or do you think this is the pop that you would like to short into?
Hi, Nigel. As I pointed out last week, the markets have bullish potential. And although the bear case hasn't been eliminated, but I'm leaning more towards the bullish potential for the markets. The fact that Reliance was a problem pocket until a week or 10 days ago, and Reliance is firing, is a very good positive for the bulls. And the nearest resistance for Reliance comes about 14.21. If it does manage to take out that, it'll probably coincide with the Nifty level of 24,858. And if Nifty clears 24,858, the hedges we have been advocating for the bullish case or the bearish case, hedges can be taken off. The market's where to clear 24,858 on the Nifty, because that, for me, will be all clear for the bulls.
Okay, trends numbers are up for you on your screen. The company's reported a profit of 354 crore. I have what they did in Q3, which is 496. So quarter on quarter, there is a drop, but typically Q3 is your seasonally strong quarter and you see better numbers. So 354 is what the company's reported in terms of the bottom line. But in the revenue, the company's done well, and on margins, the company has beaten street expectations. So the company's top line growth has come in at 28.8%, which is in line with the cheat sheet. They had indicated that it would be a 28% kind of a top line growth, but margins have come in ahead of expectations. The company's EBITDA is at 16%, ahead of the CNBC-TV18 poll of 13%, an expansion compared to the 14.2% that it clocked in the prior quarter, though lower compared to it on a Q3. But quarter on quarter, you will see a drop. But Trend's numbers have beaten street expectations. And considering the fall that we've seen in the stock price, 37% off from its 52-week high, you are seeing some buying emerge. So Trend stock share price is up close to about 3%. Jay, quick word on the technicals of Trend.
Yeah, if Trend manages to take out 5,400 on an intraday basis or 5,376 on a closing basis, that will probably signal a potential for a bottoms for the stock. It's had a deep correction from 8,200 to 4,500. So I think slightly positive for the moment, but right now it's in no man's land.
You know, out of these, Jay, out of these Mazgaon, Garden Reach, HAL, Cochin, BEL, Paras Defense, BDL, anything strikes out? All defense.
Yeah, if you recall from our conversations in November, Prashant, I had said Cochin Shipyard has completed a top, whereas when it comes to Mazgaon and I think it was Garden Reach, I had mentioned that those two are due for fresh record highs. Those are the Mazgaon's pre-split support level is about 3,800 to 4,000. So now it's bottoming from the post-split price, and it's come to record highs. So very close to record highs, and possibly has taken it out on an intraday basis. So I'm bullish on Mazgaon Dock, but it's a bit late now. And I've remained bullish since November, even during the correction. So, at that point, it was a bit surprising what Mazgaon was doing. But right now, it's interesting for a lot of people. So I'm bullish on these defense names, but not overly bullish because it's a bit late. We should have been bullish in November, December.
Okay, all right. We'll take a quick commercial break here. Just stay with us. 8 minutes to go for close. But before we slip into that break, here's some good news. Network 18 has beaten Times Internet to become the #1 news publisher on ComScore. News 18 has raced past the Times of India to be the #1 news brand in the country at the Social Plus on platform leadership network level. And yet, Network 18 is the runaway leader as per the Social Plus MMX ComScore report for March 2025 with 315 million unique views, which is 55% more than the nearest competitor, which is the Times Internet at 202 million. News 18 also races ahead of Times of India in terms of Social Plus MMX cumulative reach. News18.com overall clocked 251 million unique views to beat the Times of India overall, which had 183 million unique views as per the ComScore report for March 2025. And this is per ComScore social media metrics report. Network 18 is 2 times bigger than the nearest competitor with a 50% reach within the 389 million overall social population. And speaking about Indian languages in terms of Social Plus MMX cumulative reach, News 18 Indian languages is the leader in the category with the 182 million unique views as per the ComScore report for March 2025.
Just a few minutes left before we close for the day. It's going to be a quiet session of consolidation. In conversation with Jay Bala, Jay, U.S. markets have, it seems that the worst may be behind. The storm has settled down. What is the price action telling you, and what are the implications? Or has India completely decoupled?
Decoupling is a theory that exists only in theory. I would rather not comment about it. The market's evidence have never provided proof that decoupling is a sound concept. So when it comes to the U.S. markets, the April 7th low, there's a possibility that completed a deep correction for the U.S. equity markets. 4661 on the Dow Jones Industrial Average is very crucial. If that were to get printed, we can conclude that the U.S. markets have had a deep correction. Until that point, there is still possibilities that the markets could see one more low below April 7th. But if this is the bull case, the markets needs to do some more work on the higher side. So slightly bullish, but is neutral to bullish on the US equity markets.
Jay, any thoughts on gold from here?
Yeah, I have against the grain opinion on gold. The trailing stops for me is 3260 on gold. Until that point, the longs sustain, but the sentiment is quite high, very similar to the 2011 sentiment extremes that we saw when the markets were heading higher. If we see gold, the London bullion drop below 3153, not futures, London bullion drop below 3153, that will mark a significant top and or indicate that it's registered a significant top, recent highs of 3500. and possibly signal a deep correction to 2600, if not deeper.
You've got some stock ideas, Optimus, Infracom and Sun Pharma.
Sun Pharma broke out of an inverse head and shoulders pattern yesterday, Rima. And so I'm bullish on it with a stop loss of 1618, probably headed to all-time highs, somewhere about 2200. It's a rough estimate. And when it comes to Optimus Infracom, the stock has had a sizable correction from its 2024 peak. And the move on a weekly time frame seems to be a corrective decline. So if the stock can hold 377, once again, this stock has a medium-term bullish potential. The resistance comes at about 700 immediately. Later on, if 700 gets taken out, probably look at all-time highs for the stock.
Just stay on. We'll come back to you in just a bit. Let me just quickly wrap out things here. The Nifty's got nothing on it, absolutely unchanged. So blinking red and green, 24,326. So nothing on it from yesterday's close. The Nifty Bank also slightly lower. I mean, actually down about 0.25%. So that's about 150 points lower on the Nifty Bank. Mid and small caps, much better. You got some green on both those indices. And market breadth, actually, at least on my screen, it's almost 1:1. Slightly tilted in terms of what was down, just the number of stocks up and down today. So that's the overall picture. But of course, Rima, the sector of the day really, defense.
Indeed, BL up nearly 4%, but trend overtook it in the end after the margin beat. Q4 margins at 16% ahead of expectations, and the stock surged 5.5%. So trend goes home as the top gainer of the day. Reliance Industries had a big move, 2% up. This is on top of the near 4% gain that we had yesterday, 5% gain on Reliance Industries yesterday. So Reliance Industries was a big mover. IT made a comeback. TCS, HCL Tech, Infosys in the green. On the way down, TVS Motors was under pressure. Some softness visible in pharmaceutical names like Sun Pharma, Dr. Reddy's, both these stocks ending with a cut of about 2%. And Ultratech Cement, where the numbers were in line, but the commentary in the conference call was a bit subdued. Ultratech came in for profit booking. That brings us to a close and closing bell, but don't go anywhere. Markets Forward comes up next.